Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. On Monday, the Empire State Manufacturing Survey for October was below zero for the third month in a row, coming in at minus 6.8, and industrial production for September rose 0.1% compared to the prior month's 0.5% decline. U.S. crude oil fell slightly as production from non-OPEC suppliers continued to grow. On Tuesday, the Consumer Price Index for September rose 0.3% compared to the prior month's 0.2% gain, and stronger than expected quarterly reports helped boost stocks, with 52 companies reporting numbers that beat bottom line estimates. The Dow Industrials closed 75 points higher. On Wednesday, housing starts for September fell 9% to an annualized 1.047 million units. However, permits were up 6.3% to 1.225 million units. The EIA Petroleum Status Report for the week ending October 14th showed a decline in crude oil inventories of 5.2 million barrels, and U.S. crude rose 2.6% to settle at $51.60 per barrel. The Federal Reserve released its Beige Book, and it did not contain any surprises, showing a modest economy, not particularly strong with regards to wage growth or inflation, but not exactly weak either. On Thursday, jobless claims for the week ending October 15th rose 13,000 to 260,000, and existing home sales for September rose 3.2% to an annualized 5.47 million units. On Friday, markets opened mostly lower on mixed earnings reports and strength in the dollar. Now let's take a look at some stocks. Netflix posted quarterly earnings showing a 50% rise in its consumer base. With several exclusive shows aired across the globe, the company draws far more new customers internationally than in the U.S. Netflix reported earnings of 12 cents per share on revenue of $2.3 billion. Shares soared 20% on the news. Shares of Intel fell despite beating consensus estimates after the company's outlook for next quarter's revenue disappointed. The company reported earnings of 80 cents per share on $15.8 billion in revenue, while for the next quarter they expect $15.7 billion in revenue. However, analysts were expecting closer to $15.9 billion. Harley-Davidson, which holds around 50% of the motorbike segment, announced its reorganization plan to reduce jobs and cut costs after reporting slipping sales and profits in the third quarter. Sales of Harley reached $1.3 billion, with revenue of motorcycles and related products dropping to $1.09 billion from the $1.14 billion in the same period last year. Shares were up over 7%. Morgan Stanley reported a better-than-expected profit on Wednesday thanks to a surge in trading revenue. The New York-based firm said net income rose 57% to $1.6 billion or 81 cents a share in the third quarter, compared with $1.02 billion or 48 cents a share from a year ago. Analysts had expected the company to earn 63 cents per share. Global commerce company eBay tanked more than 7% after the company beat its third quarter earnings but had soft guidance. eBay reported earnings per share of 45 cents on revenue of $2.2 billion, compared to analyst expectations of 44 cents on $2.2 billion in revenue. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.